And if we're not able to take all the questions, we'll try to reach out to you and respond to the questions that you've put down here. So there's a Q&A button at the bottom. Just keep entering your questions. So the first question here is, I think it's for Sven, and I think it's a very basic question, and it says that, can I have multiple insurance policies? And can I name my trust as the beneficiary of those insurance policies?
Thank you, Folashade. Yes, actually, yes. Clients can have as many life insurance solutions as they can afford and as they can justify. Obviously, from an insurance perspective, they want to avoid that clients are overinsured. So if I have a net wealth of 1 million, it's very unlikely I get an insurance worth 10 million. So wealth, income, and life coverage needs to be somehow in line. But other than that, many clients can have several solutions, can have onshore Nigerian solutions mixed with an international offshore solution we provide. Usually, and that's in line with the offices provided, services provided by ERM, very often we combine trusts with life insurances, meaning the trust will be the policy holder, the client is the insured person, and the proceed goes back to the trust and will distribute it according to the letter of wishes, or alternatively, we can nominate the beneficiaries individually. So all possible structures are likely, but very often we do combine trust with insurance from a holder, but also beneficiary perspective.
Thank you, Sven. There's another question here that says, how can I get an incapacity solution? And that's a power of attorney. And it really is about legal documentation. And so you can speak with us, and we have this already put together, and it's very easy. You just sign off on it, and you mention whoever is going to be your chosen person to take those critical decisions for you if you become incapacitated. Lawyers are also known to draft these documents, but again, we would always advise that you engage professionals who will even tell you, the sort of things that you want to include and the sort of profile of the person that you should be giving those very sensitive powers to. There's another question. The question is for Anderson Tax for Israel. And the question is, what should be the very first consideration I should have from a tax planning perspective in view of the pandemic? What should be the first thing I should do?
All right, thanks for that, Shade. The first thing you should do really is, again, talk to experts, talk to professionals that will be able to guide you on what needs to be done from a tax perspective. Like I said earlier, the fewer items that are in your personal name, the fewer items you need to declare for tax purpose. If you move from assets to some form of investment holding vehicles, you don't need to declare those assets in your personal name when you're filling your personal tax returns. So I would say the first thing to consider right now is, how do we ensure that we have a very solid investment holding vehicle in place that helps us safeguard the assets and at the same time safeguards the income coming from there and shields such income from tax purpose.
Okay. The next question is for Sven, and it says, how is the insurance policy protected if the insurance company goes under?
Interesting question. Thank you. So first of all client assets within the insurance company are segregated from their overall assets under management or their own equity. But I guess other than any other industry, name it banks, for example, there's no other industry which is more tightly and closely regulated than the insurance industry. The companies we are working mostly to cover Nigerian clients are companies based in Canada with 170 to 180 year track record. They survived many crises in the last 100 years because of their tight regulation. So the Canadian Insurance Authority looks at them very closely. They have huge assets under management, and most important, their equity portion within their assets under management is much more than every other private bank, for example. Now, in a case an insurance company would go bust, which actually only happened once, 93 small regional North American company. If that would happen, then the insurance regulator would take over the management of the insurance company and would sell each and single contract to one of the competitors. You may remember 2008, AIG, the financial conglomerate in North America, AIG Group, which was one of the big scandals in 2008. AIG, American Insurance Group, is still existing. It's now AIA, American Insurance Association. It's still 6th largest insurance company worldwide. So when that group went bust, no single contract got lost. All clients still have a contract in place because of the very tight regulation, because the company could ensure that all claims and liabilities could be met at that point in time. So the insurance companies we are working with, they have a financial rating of AA or AA minus, and are therefore extremely solid and safe.
Okay. So the next question I think is for me. It says, what if a deed of gift is given out when a person dies? Any downside to that? I think that even though the question is not properly structured, but I think it's important to know that a deed of gift is a gift in lifetime. You know, so that means that during your life, you're ceding authority over that property, technically. So it's a gift that you give in life. It is not to be given after death. Otherwise, then it has to be structured as a will. So the gift is gifted in life and not after the person has died. And that is why we said it comes with certain risks. So if you're living in a house and you decide to give the house to your third child, and you sign the necessary legal documentation and transfer the authority to your child, if your child sells that property, then you're at risk, you know, and you just have to make sure that if you have a deed of gift, the person you're gifting to is someone who you understand and know very well. The next question is on SMEs and insurance policies. And it says, how does an SME survive in times like this? And are these insurance policies for SMEs? Sven?
SME, I guess you talk about small, middle-sized enterprise, right?
Yes.
It's a different story. So first of all, my company, we are specialized in advising international private clients. So I do not advise corporate clients. I do know that there are solutions available for companies, for example, pandemic insurances, which would cover potential losses because of a pandemic situation. But this is out of our services. From our perspective, we do have quite a number of corporate clients. They take insurance to insure their management, for example. They take insurance to plan the company's succession. But we cannot insure the financial losses which are caused by a pandemic. This is not possible with a life insurance. But we can obviously, we can secure the future success if something happens to the key person. So we take an insurance on the key person. If something happens to that person, money will go back into the company and could be used to ensure the future profitability of the company.
Okay, thank you, Sven. And there's a question, is a repeat, really. It's about multiple insurance companies. And the person is saying, I already have life insurance policy covered by my organization. Won't it be counterintuitive having a second insurance policy?
This is, it's not a repeat. It's a question we get quite often, actually.
Okay.
See, the solution you may have provided by your company, that's usually term insurance. They insure you as long as you're with the company. If something would happen, the money would go to your family. So that would only secure one need, family security need. But the solutions we provide, as they are whole of life, they are permanent life, they move on until something happens, until you move on to the promised land. This means it is a guaranteed investment. It helps to preserve wealth, and it helps to diversify. So what I recommend, even though you may have a local solution provided by your company, you want to set up a comprehensive insurance plan to protect families, create liquidity, diversify your assets, and preserve wealth. So do one thing, but also do the other, as it's usually these are two different types of insurance, and the solution we provide are dedicated and tailor-made for high net worth clients.
Okay, thank you. There's a question here, Israel, and it says, will retirees be expected to pay tax?
Okay. From a tax perspective, tax follows money, really, follows flow of funds. Once funds flow, the taxman will be very nearby. Now, having said that, the general rule is tax is payable on all income. However, there are some exemptions given on some type of income that are not taxable. One of them I've explained earlier in my presentation to say foreign earned income for individuals are not taxable if you meet certain conditions. The next thing is for some retirees that are actually not engaged in active business anymore. People like that typically depend on their pension savings and all that to be able to live. Pension distribution from your pension account is not taxable. However, even though you are elderly and you still have some investments giving you steady flow of income, you are expected to pay tax on such income. Now, we can then discuss how do we then manage your tax exposure in that regard. There are things you can put in place to ensure that you don't actually lose so much in taxes, even though you are meant to pay tax.
Okay, thanks. And that question is linked to this one that says, if I earn income abroad and don't remit into my local DOM account, what are the tax implications?
Okay, the exemption given in the law for on foreign income is actually if you repatriate it to Nigeria. And the basic idea behind it is the government is trying to encourage repatriation of funds to Nigeria so we can have more liquidity, more foreign currency in the economy. So on the face value, if you don't repatriate the income, you don't bring the income back to your DOM account in Nigeria, you may not qualify for such exemption. However, what we've also tried to do with some of our clients is to walk through their transaction flow for the year and then see how we can manage their exposure in this regard. But again, I would say that for you to qualify for it, on the face of it, you have to bring the income to Nigeria. If you don't bring it to Nigeria, we can then assist you to look at your flow of income for the year to see how we can manage your exposure such that you are still qualified for that exemption.
Okay, and there's a question on a medical insurance policy. Do you have, Sven, medical insurance policies for ages 53 and 57 that sufficiently covers annual medical checkups in the US for a Nigerian couple? And can this be arranged through ARM trustees?
It's not something we are specialized in. It's as obviously medical insurance is not part of the estate wealth planning process. Obviously, medical bills can eat up a lot of your wealth. Nevertheless, we do have access to some providers, namely Bupa and others. So if you have a specific request, please reach out to ARM Trust, and I will try my very best to come back with a few quotes, which also cover medical checkups in the US. Even though US is the jurisdiction with definitely the highest medical cost for any kind of checkups. So I would recommend you may do it in the UK or even in Nigeria. There are great facilities other than in the US, but happy to help.
Okay. So there's a question for me here. It says that the process of transferring assets to successors or beneficiaries is not without government charges and costs. Is this still a good advice? The truth is, if you do nothing, there is more to pay. But if you do something, you reduce how much you're exposed to in terms of what you have to pay. So if you have a will, as we've said, there is going to be a valuation of those assets if you decide to use the will. And 10%, if in Nigeria, 10% of the value of those assets goes back to the government as inheritance or probate tax. If you decide to have a trust, now, depending on the sort of assets, if you have real estate assets and those assets have to be transferred to your trustee, indeed, you have to pay government charges for transfer of real estate in Nigeria to your trustee. But really, on the whole, if you look at it, the cost of not having an estate planning structure is so much more than the cost or the expense of having one. And so it is a good advice to have an estate plan. And I think that's what we can say, but we can speak further as to how you can manage these costs, you know, exactly. and when they're and when they're payable.
Exactly. Falashade, just to add a bit to that as well. I mean, when clients ask me that kind of question, the angle that I take it to is, however you spin it, someone has to pay for it. Right now, the cost is certain. We know the entire process of having to perfect title to your property is probably about 3% or so right now.
Yeah.
If you leave it to your kids to do, who knows what the percentage will be when that time comes, and that will be in addition to the probate fee as well. So the best really is to take it on now and do it now when you are aware of, when you are certain of the cost. Like Falashade said, we can then work with you to talk through how you can manage that cost.
Okay. There's a question on Islamic clients. How do you reconcile your presentation with Islamic law for your Muslim clients? And I will look at it from an estate planning perspective. And so for us, for our Muslim clients, we have trust that we've administered for Muslim clients who have passed on. And for us, if you decide to have a trust with us as a Muslim, we have what we call a post-settlor demise process. That means that we have to consult Islamic clerics to make sure that the manner in which your assets are being distributed are in line with Islamic tenets. Also, we draft Islamic wills. If you decide that you want your will to be drafted in line with Islamic laws, we also make sure that we draft the will accordingly. And so I believe that for everybody, we have something, we have a solution from an estate planning perspective. I think from an investment perspective, again, those decisions, you know, are outlined for the trustee. We have a document that writes with the trust. If you decide to have a trust, called a letter of wishes, and in your letter of wishes, you just write out how you want your trust to be administered by your trustee. And if you have restrictions regarding investments, you have limitations, you know, regarding Islamic laws, your trustee is able to be guided by your letter of wishes, even when you're no longer alive, and is able to make sure that those wishes and those rules are followed in the administration of your trust or in the distribution of your assets through a will. Now, there are several other questions, and we will have to round up in the next 6 minutes, but I think that we can still take another question. Let me see. So it says, is the insurance subject to tax? If I decide to take an insurance policy with the IPG, through IPG, would it be subject to tax?
Well, first and most, okay, Israel, you want to take it first?
All right. There are clear provisions in the Nigerian law that allows you to take life insurance policies, and whatever premium you pay on such policies are not taxable. So what that means is that, let's say you have 100 million income right now, and then you use a part of it, maybe 20 million or 30 million, to take a life insurance policy, one of which Sven as proposed. That premium you are paying will be deducted from your taxable income for that year. So it serves as a relief against your tax payable. So, Sven.
Life insurance globally is one of the tools with the highest tax benefits linked to it. So for many governments, they do support life insurance or the life insurance industry with giving huge tax benefits. Look at the UK or the US with a 40–50% inheritance tax. Proceeds paid out in case of occurrence of the insured event, meaning in case of death, the payout is free of any capital gain, income, or estate tax. So it's fully tax exempt when something happens. So the insured amount goes tax-free. But other than that, in most of the other jurisdictions, insurance does enjoy high tax benefits compared to any other planning solutions. If there would be taxes applicable, then we do have options by structuring the insurance and the insurance proceeds properly by using a trust. So instead of beneficiary, we receive the funds directly. We're going to route the funds into a trust to further increase tax efficiency. So many options are available. And I guess you have the experts here on that call. We have Anderson Tax, we have ARM. I guess teaming up together properly to set up a bulletproof wealth transfer plan would be a strong advice. And some thoughts that I would like to share. So the estate plan is quite often, people forget about this, but I'm pretty sure all of you had a plan for life. All of you had a plan for success. You all have a business plan. You may even have a plan for love. Without that plan, you would not be in a position as you are now. You would not be that successful. Now think of that. The estate plan is maybe the most important plan because you will no longer here to execute the plan. So even more important that you set up a plan, bulletproof, that can be executed most easily and most efficiently to ensure the plan will reach, or the funds will reach the denominated persons. So that's my advice, maybe at the end of this webinar.
Yeah, I think there's just one more question that we should answer. It says, what is the negative or the disadvantage of having a trust? And really, to tell you, a trust is so efficient. However, you must get the choice of trustee rights. Because remember, you are moving legal title to this corporate entity. So the pedigree of your trustee is the most important thing that you must look at. The professional understanding of the concepts of trust, the administration of trust. You know, you want to look and make sure that you're choosing a trustee that understands these things. But most importantly, what could go wrong is if you choose the wrong trustee. So the pedigree of the trustee is critical to choosing, to having a trust. And so thank you for joining us today. We've given you enough to reach out to us to access these solutions. And we hope that you really do that at this time. And like we said, don't rush into anything. Think about this and contact us, speak with professionals. And we've put our contact details on the screen. Speak with us and we will take you to that place where you will have a peace of mind. Thank you very much.